All right, welcome to another episode from the Chart Readers. We are continuing our weed sector technical analysis videos looking at CGC and CRON. So, the only reason why I knew there were earnings today is because someone mentioned it on the comments from the last video. I will sincerely say if I didn't know earnings were today, this gap down is easy to just see that something horrible happened, right? So I genuinely have no idea what the earnings said. I have no idea, if it was revenue, op or whatever it was. All I know is the market didn't like it, right? So I often talk about not caring about the news or fundamentals or stuff like that. This is what I mean by that. If it was good, trust me, I would have known it was good. If it was bad, I will see it like this and I will know, right? So, all that said, real quick, what are we going to do today? Same thing we always do, right? We'll take a look at the daily and the weekly to see how things are setting up. We have our 5 moving averages, these horizontal support and resistance lines, and then when we're done up here, we'll use the MACD, RSI, and volume as our lower indicators. So, look, if you've seen any of the other two weed sector videos that I just released, this curve down is definitely a common theme. Tilray, ACB, OGI, and Hexo all had what was a decent run up in January and then a little bit of a curve down, losing all the moving averages across the last between 5 to 7 days, pretty much what you see here. This is a horrible reaction to the realities of earnings, but I'm telling you, if and it just goes, I'm not going to repeat it too much, but if it was good, it would have gapped all the lines and it would have flown up. You know what I mean? But instead, it brings the MACD into a horrible position. It accelerates the RSI down like that, and this is probably the worst volume of all of them that I've reviewed so far. You know what I mean? So, again, this is what I mean when I say the lines will tell me if the news was important enough or not. You know what I mean? And one of the reasons I don't like looking at earnings or news or stuff like that is, look, there's too much to interpret. I might read the earnings as actually something pretty good because I care as a long-term investor and I see the strategy that doing this now will do in a couple of years. Look, the market is going to ask, it's the Eddie Murphy joke. What have you done for me lately, right? Like, what have you done for me lately? If you're not going to do anything, I don't care about the next couple of years, right? I care about now. And it's real easy to believe something sounds good and then just watch the market say, nah, you know what, we're going to gap down and just end the day minus 17. That's a silly amount of money to lose, right? And one more time, this really goes into why I generally avoid earnings. If I was in this, I did it with Tesla. I was very open about it on one of the videos, but I bought Tesla before earnings because it had a good technical break of the 8 and the 20. I rode it up until the earnings were after hours, so I sold at 1 p.m. my time, 4 o'clock Eastern, right before market closed. Earnings came out after hours. It seemed like a good report. I waited for the morning. I probably missed like a 10% day if I had to guess, but I got in after that because I saw that market actually liked it. And you know what? I made a good amount after that too, so earnings are just way too risky. And for real, I'm more than happy to miss a 17% up if the earnings were good, because if they were really good, there should be more candles after that, right? So, a little more theory than, specific, but hey, there's not much for me to really say here, right? The one thing I don't like is we lost the support line, so I got to zoom out and, I mean, are we knocking on all-time lows right now? Is that what's happening? Oh my goodness, we're not, but ooh man, there's a lot of reason to believe we're coming down to two, because two, look, you can see it. Two is roughly 50% of that guy, and it kind of hits a lot of this horizontal. I'm gonna go ahead and just make it right there. Now it's too high, somewhere around there. Yeah, I think that's an important line to put right there, actually. So, I'll be honest, two seems like a very realistic number. And real quick, so this right here is an M. I hate M's, and it looked like it wanted to go away and turn it into a W. Um, it looks like it obviously couldn't W, right? So those are the only kind of pattern things I talk about. I don't even know why I mentioned that. It's also on the weekly. But yeah, nonetheless, this looks really bad. There's not too much more I got to say about this. So CGC, ouch. I think we'll just end it with ouch. Again, looking at CRON, a few things jump out. Obviously, if you're under the 8 and the 20 on the daily, you can't expect too much, right? This right here is actually very disappointing because you break two lines, you get a doji, so I always say dojis don't count, and then you get what looks like a beautiful candle with confirmation, you know? RSI though didn't jump up. I don't know if that would have been enough reason to maybe buy it. And look, we actually couldn't get over the biggest green one in the quickest view, right? So a couple things that maybe would have helped avoid it, but yeah, for sure that's a horrible 3 day right there because that's a fooler. You break two lines, doji doesn't count, you get good confirmation. Bad after that. That's not how it should work, right? So, excuse me, sorry about that. I think some of that also might have been this is around the time where the market kind of seemed like it was getting ready to cool off. When I say the market, I mean the Dow, Nasdaq, and SP 500, right? But that's a rough 3 days. I'm going to say it one last time, okay? What are we looking at here? We're obviously going on the. So look, generally it goes down, horizontal, hopefully up. It seems like we're going back down. You know what I mean? So I'm very much worried. I'll zoom out on the weekly to see where we are on all-time lows. But yeah, MACD is already in the negative. MACD looks like the green's about to go under. RSI is now stopping this like horizontal tightness and it looks like it wants to go down. It's done it once before, but this seems a lot scarier than this. You know what I mean? And again, horrible, horrible volume. So CRON looking real bad. Oh, are we already knocking on all-time lows? We're not. Okay. Did I already do this? No. That was on the other one. It looks very similar to CGC though. Sorry. I don't think I've done a donkey laugh on these videos in a while, but I'm actually not going to draw any new lines because look, that's a hard down. That's a hard up. I think if we lose this, it'll be a quick fall here and a quick fall here. So I'm actually not drawing any new lines based on the weekly. But yeah, that's also a really ugly weekly, right? It looked like it was going and getting ready to get over the 8, but it said, nah, we're going to keep going lower, right? So this is now the third weed video I've made, the sixth stock I've looked at. All of them look bad. So there's very much reason to be concerned. There really is, and a lot of them are getting ready to knock on all-time lows. That's why I've been zooming out to see where these are relative to all-time lows. So yeah, just be careful in this sector. I really can't stress it enough. Hey, if you disagree with anything, please let me know. I'm not here to pretend to be perfect, but hey, I appreciate your time. More videos are coming.